A shout out to the YouTube audience here.
Sure,
because I'm seeing some Ohio State Buckeyes support here that I really warm to. Yeah, a little OH out there.
Exactly right.
You're supposed to say IO. I say OH,
and I say
IO. There you go.
Oh, I get it. All right, I'm now with you. I get it. I get the thing. All right, very good. That's Columbus, Ohio. That's what you learn out there. All right.
We don't have really pro sports teams, right? Besides the Blue Jackets.
No, you've got
and we don't need pro sport teams because we have the Ohio State University.
Yes. Yeah, I get you. I get the whole thing. I get it now. All right, let's check in with Shana Sissel, CEO of Banríon. Shana Sissel, thank you very much. CEO of Banríon Capital Management. Shana, what's the conversation you're having with your clients these days as they think about stocks, bonds, alternatives, and some of the volatility we've seen so far this year?
Well, first off, I'm not discussing Ohio State football. Go Hawkeyes. As so far this year, what we're talking about with clients is, dealing with the volatility of the market. You guys know me well enough to know that we're an alternative focused shop. And so most of our discussions are around how we can use alternative investments as a way to manage the uncertainty in the market, which is leading to, a lot of volatility and a lot of just overall feelings of discomfort for their clients on what happens next.
So what are your clients using here? Because I'm looking through your notes and seeing some pretty interesting tools. You mentioned you're focused on alternative investments. Buffer ETFs, there's been a big debate about these, but even some that venture into the crypto area.
Okay, so now you're just hanging me out there to say something controversial. I am not a fan of buffer products, and I really dislike the crypto buffer products. So rather than sit here and trash them, I'm going to kind of pivot the conversation and focus on what I do like, not what I don't like. So we're not actually opposed to crypto. In fact, in risk on environments, Bitcoin and ETH using some liquid products like the Bitcoin ETFs and the ETH ETFs have been something that has been of interest to clients. Overall, it's really hard to get specific individual access through cold storage wallet or having to open Coinbase. Financial advisors in general have a hard time trading and custodying crypto. So they have had interest in the ETFs that are coming out there and some of the private product in the space that go beyond ETH and Bitcoin. But we're also looking at things like managed futures, things like hedged equity, and types of interval funds that give access to real estate debt, and different types of private credit and private equity. Choosing to get exposure through private equity, private debt, things of that nature through the interval fund structure and not some of these well-packaged ETF and mutual fund products that have private credit in the name, but actually don't have a whole lot of private credit in the portfolio.
So talking about private credit here, how do you suggest your clients get exposure to private credit? It's become such a growth story over the last 10, 15 years. What are some of the good vehicles that you suggest?
Yeah, so private credit has become such a huge aspect of the capital markets in the last 15 years because of the financial crisis. Non-bank lenders have become increasingly important for access to capital for business in general, because the banks haven't been lending the way they did before the crisis. The best vehicles, in my opinion, to get access to private credit are interval funds. Interval funds are something that have been around for a while, but have become more of part of the conversation in the last, say, 3 years. They're semi-liquid products. So they're closed-end vehicles that have quarterly liquidity. So the conversation is, you want to invest in private credit. That is not a public market. So you need to have a vehicle that matches the liquidity of the underlying, and that would be an interval fund. Interval funds are a conversation that people have to have with their advisor or whoever their financial professional is that's advising them about liquidity terms, because at the end of the day, you still have to be comfortable with the fact that you don't have daily access to your investment and the underlying money that you allocated to it. So it really is the optimal structure for the average investor, because interval funds are available to any client, but the liquidity can be less so than, say, a private placement vehicle. So it becomes a question of what structure works best for that individual client. And if they qualify because they're an accredited investor or qualified purchaser for a private placement versus the interval fund, which is available to anybody, but actually might have less attractive liquidity terms than, say, the private placement.
You know, we've been talking all morning about what's going to happen to rates, what should happen to rates, what could happen to rates because of Jackson Hole, Shana. But if I look at WIRP Go on the Bloomberg terminal, markets are clearly pricing in over the next year or so a drop of 150 basis points. In that kind of environment, if that is actually what happens, where do you get the best advantage?
So if interest rates are dropping, obviously that means that the principal value of fixed income that's already issued goes up. So you could see some strength in the fixed income markets in general. Private credit has been of interest because it has a lot more flexibility. They tend to be floating rate. And so, in the beginning of a rate cutting cycle, private credit, because of the floating rate nature, might have an initial underperformance versus traditional credit. But overall, I think that in a rate cut environment, that actually can be really favorable for equities. But this has been a very unusual cycle, and we keep pricing in rate cuts that aren't happening. So I say proceed with caution.
Shana, thanks so much for joining us. Always appreciate getting a few minutes of your time. Shana Sissel, she's the CEO of Banríon Capital, joining us here with our news.